Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike and Al, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team.
And
Mike
it is
Al.
Saturday, and we are talking about money. Federal Reserve paused raising rates this week. But they did say maybe there will be a couple more before the end of the year. Maybe, maybe not, maybe 2, who knows, maybe 3 or 4 or 5. Who knows? It depends upon what happens with inflation. They're seeing it come down a little bit, just a very little bit. We're not seeing a huge move in inflation down. So the Federal Reserve is not going to lower rates this year. It's very, very unlikely they're going to lower rates. It's important that we talk about inflation. We talk about it a lot because it impacts stocks, it impacts bonds, it impacts real estate, it impacts all the financial markets and all the investments. So we're going to talk about it today. We're going to talk about it in future programs, but hopefully you gain some insights with what we have to say today and in future programs. And that brings me to annuities. They had record sales in these uncertain times. They're sold as a safe, long-term income stream. However, we think of them as chocolate-covered hand grenades. And we'll tell you why we say that later in the program. Standard & Poor's revenues come 50% from overseas. Our main competitor is China, and that competitor wants to replace America. It's so important to understand what's happening because that too impacts our investments. But let's start with inflation. Al.
Inflation, Mike, what is inflation? What is inflation? How did we get here?
So tell us.
Well, we've talked about many times, the time we compare this to is the 70s and 60s, 70s, and 80s when we had 20% inflation, I think, ending in 1982. And it started in the 60s. And back then, the economy was quite different, though. You're often saying that things that never happened before happen all the time. And so comparing that time of inflation, comparing now, there's some differences in that. Like back then, we were a heavily manufacturing economy.
We were.
And inflation has a really detrimental effect on the manufacturing economy. Now, we're about 68% service-orientated economy.
And that makes a difference.
Yeah. And so back then, 30% of workers were unionized. Now we're about 10%. Why is that critical? Because every time there was a cost of living adjustment, those guys got a bump in pay. Now that's 30% of the workforce. Now it's only 10%.
Although teachers get a bump in pay, a lot of government people get a bump in pay.
Yep. But it's still less than it was 50 years ago. And the other thing, and I mean, you and I love to debate this, so is we had the 72 oil shock, which exacerbated the problem. And we've talked about this, that the wrinkle out here right now, we see inflation coming down. We saw oil prices drop. They're below $70 a barrel, and they keep precipitating down.
But in 1972, you had OPEC, which pushed prices way up.
Yeah.
By the way, oil prices were under $3 a barrel when they started. $3 a barrel. They increased it 15%, which is like 50 cents a barrel.
Did you hear yesterday, Mike, that Washington has the highest gas prices in the country?
I know. Because
of pipeline problems and refining.
And we have tax people.
And we do have high. I'm excluding that we have one of the top 2 or 3 highest gas tax in the country, which is going to be a problem as we move to electric cars.
I don't know where gas prices are today as compared to what they were a year ago. With an electric car, I just plug it in at night.
But that being said, we're seeing oil prices down. We got the Fed pausing interest, saying that, okay, we're going to leave the door open for a couple more rate hikes. We had Britain raise theirs by 0.5 percentage. We're still seeing in other parts of the world, in Europe, that inflation is a problem. Well, they started a lot later than us. Remember, they waited 6 months before they did anything, while we started rapidly, 0.5 point, and they were doing nothing. So they're way behind the curve. I think they're feeling it a lot too. But and then we have something else to throw into the mix, is the debt ceiling. And people are like, well, what does that have to do with inflation? Well, the Treasury, as I was mentioned, we were talking yesterday, as mentioned, the Treasury keeps their account at the Federal Reserve, and that dropped down to about $23 billion. They like to keep about $500 billion in that account to pay bill. And so we get something that's what they're starting to do is these reverse repos, right? There's $5 trillion in money market account, and they're saying, where can we get the money to build the coffers of the Treasury. Well, they're going to go to money market accounts, but then they have to pay out higher than what the money markets and where you can get in those investments to borrow that money. So these are problems and these are headwinds that we gotta face. And with $30 trillion in debt, where are tax rates going to go and how is this going to affect the economy? How is it going to affect things going forward? We can't keep lowering taxes and borrowing money to fund future tax cuts. It doesn't work.
On the other hand, if you look at England and France, they carry their debt for centuries. It's different from a human being because for you and me, we have to pay off our debt.
Yeah.
At the time we're deceased, our debts are paid off.
And states can't run a deficit. States have to have a balanced budget, but the federal government can run a deficit.
And countries do run deficits.
But the problem is, Mike, with inflation going on and the challenges we're getting from China, India, Brazil that want to build their own currency to compete with the dollar. If we lose that standing, then our debt service is going to go way up, and that's a problem.
Maybe. On the other hand, inflation is really positive in terms of debt because as revenues go up and spending goes up too, but the debt in terms of total GDP begins to shrink because inflation pushes the purchasing power down.
Yeah. So
those bonds which sold for $1,000 a piece, you needed $1,000. $1,000 from 1961 to 1979, the purchasing power shrank by 70%. So it meant you could carry 30% more debt for the same purchasing power.
But do you want to do? But is that a good long term?
It's not a good long term strategy.
No.
I mean, we've seen that in other countries where they have 100% inflation, and it works for a short period of time.
It does, because what happens is a lot of these countries that had hyperinflation, Venezuela being one of them, and what they did is they thought, we got this inflation problem because they wanted to repatriate everything back to people, and they started making these payments. And then when they got in trouble and realized, dang, this is more expensive than we thought, what did they do? They started printing more money, which exacerbated the problem and ended up with 300, 400, 500% inflation. Happened in Zimbabwe and several other countries.
A lot of countries.
And it's a tough trap to get out of. Difficult.
What a lot of countries do is they convert to the dollar.
Yeah.
Ecuador, the currency in Ecuador is the dollar, the U.S. dollar, because they got into that inflationary cycle, and the only way you break it, or the way that it's broken a lot of times, is to convert to the dollar currency, because the dollar is fairly stable, or it has been, and so by converting to the dollar currency, they get rid of inflation almost overnight.
But we can't do that here because we're already on the dollar.
That's the problem.
But back to how where does inflation go? We've seen some risk in the regional banking. We've seen some risk they say there's risk out there in the commercial real estate. Okay, we predict this war in Ukraine, if I can say it right, will end. And do these things exacerbate the inflation problem? Oil coming down, is that that's deflation?
I think that should be deflation. That's going to help.
But do you think the war in Ukraine though, when they have to start, if that ends and they have to go back and rebuild, that seems more inflationary to me.
I think some of the concept for the Ukraine is to make Russia pay for it. So that oil that is being sold by Russia, a lot of those revenues would pour into the Ukraine to rebuild Ukraine. And of course, the U.S. is going to loan money, Britain's going to loan money, Germany's going to loan money, the International Monetary Fund, the World Bank. A lot of people will step up to rebuild.
And also, in this country, I mentioned manufacturing in the 70s, but there's a manufacturing boom going on in this country now too. And bringing the chips back, this Inflation Reduction Act is causing a massive boom in manufacturing. It's happening to build these plants they're trying to build for this new economy, new green economy. They need these massive amounts of land to do it. And they're doing it down in the south in those areas where they can find massive amounts of land. There was one company I was reading about, I can't think of the name of it, but they had like a 10 football field size plant or facility, and they've been waiting for 20 years to, and all of a sudden, boom, they got calls and started getting calls, and it got rented. And, so there's a lot of that going on, which is inflationary to me.
It is inflationary. All the building, all the manufacturing, it is inflationary.
And so it's going to be interesting to see what happens in the next 6 months to a year, whether in the next several years, 4 or 5 years, whether inflation is going to act like it did in the 70s, or is it going to subside. And a lot of people like the conference you went to a couple weeks ago, those guys all predicted, nope, by next year and the year we're going to be down. Inflation's going to be down.
And that has people very concerned. Inflation has them concerned. The markets have them concerned. People don't like to lose money. And what they're looking at is maybe they are. We're going to come back after the commercial break and talk about annuities. Because one of the things that's being sold by financial advisors and by insurance agents are annuities as a guaranteed kind of income. Don't believe it.
About money with your AFC team, Mike and Al, on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
So one of the things that's happened in 2021, 2022 is the market has sagged off as bonds have fallen in price. There's been a big push for annuities. But think about this. Before we talk about that, think about this. Social Security in 2023 increased 8.7% because of inflation. The number of dollars people received went up. And so most retirees see the dollar amount and they get happy they're receiving that. 5.9% in 2022. A lot better than no response, but are they really understanding what's going on? Because if you look at 2000 to 2023, Social Security increased by 78%. Sounds wonderful, right? But if you look at what retirees buy most of the time, what they buy went up not 78%, but 141%. So retirees, if they were getting $1,000 to make it simple, their income from Social Security went from $1,000 to $1,780. But they had to lay out $2,410. They were short at $600. Out of $1,000 in 2000, they were short at $600. There was a 36% loss of purchasing power.
Mike, 1960 to 1980, the dollar, they lost 70% of it.
They've lost half of that.
Period of experiencing double-digit inflation, right? Eggs are up 110% in 1 year. Bread 18, dental visits 16, electricity 13%, car repair.
And that's just this year.
I know. I think my guy raised his price. I think he went from $140 an hour to $188.
Yeah. I mean, and most people are looking at what they receive in fixed income and see it up, but they're really not looking at it, They're
not looking at it in the sense of what it can purchase. They're looking at it in the sense of the dollars in, right? They're looking at the sense of what dollars do I get into my bank account? It's really an irrelevant number if it's not going to purchase what you need to purchase and in the amounts you want to purchase.
Right. I remember once going through the Communications Museum in Seattle and seeing an advertisement for a telephone operator in 1920 or 1910, something like that, for 25 cents a day for a 12-hour day. I mean, that's, prices have increased and salaries have increased. But when they're looking at just the dollars and thinking things are well off.
Well, when you're living on a fixed income, Mike, I've been talking to two clients they're clients that are moving their money one's a client already and he's going to move more money. He's nervous, and one's a retiree. I just spoke with him today and he's nervous about retiring. And I said, yeah, I understand. But the problem is, I said, he's worried about the markets fluctuating. I said to him, the markets are going to fluctuate. We can't control that. The more worry you should have is purchasing power and losing that purchasing power over the next 7, 8, 9 years. We don't know what inflation is going to do. And if you're behind the curve, your purchasing power goes down, and it's tough to recover from that.
Yeah.
Because then you're pulling the same amount of money out of a portion of money, and that money's not growing. And then you have serious problems, especially as you get in your last years of retirement and you have health issues or whatever you have, and you don't have enough money for those. That's a problem.
It is a problem. One of the biggest things that's going on are people being kicked out of nursing homes and
you talk
care
about
facilities.
These costs are nothing compared to nursing home costs and medical costs.
Yep.
In the last 4 years of your life, you can expect to spend more on medical than on anything. I don't have the numbers in front of me. We'll do another show and talk a whole segment about it. But you think this bread's expensive, and that'll blow your mind. That'll be how expensive it is.
It's no wonder that 35% of Americans feel that they're worse off this year than they were last year. And 54% said they're feeling the pinch. And all that leads into what a lot of people are being told is to have a fixed income from an annuity. Well, fixed annuities are up $23 billion in the first quarter. That's up 42% from last year.
They've blown the socks off of 2008.
Yeah.
Right, which was a great year for annuities. I know, because that was my first year in the business and selling and working for an insurance company, and they pushed annuities, and they had their best year ever in 2008.
And
so, but the problem is that people are afraid and scared of the market. They're scared of the fluctuation. And so they think this is a safe way to protect their money. And it is in a sense, it'll protect the nominal money that you have. But the real purchasing power of that money is going to decrease precipitously if you don't keep pace with what's going with inflation.
Yeah. You mentioned the increases in prices of bread, of eggs, of whatever. All of those were greater than 5%.
But think about this, Mike. Here's a concept that I don't think a lot of people. I mean, I've read some of my research talked about this, but is 2% even a real target for inflation? Is that ridiculously low? That's low, historically a low number. Will we ever get back to 2% inflation, or is 3.5 more likely the place where we land and stay there?
I think the Fed would be thrilled to get to 3%. I think most of the world would be happy with 3%. That's where inflation
I agree, but
is right.
when you're used to 2%, when you're used to living on free money, going to 3% or 3.5% is a different paradigm.
And when people talk about 3%, think about what goes into the consumer price index or the personal consumption. Mm-hmm. A big portion is housing.
Yeah.
40% of the consumer price index is somehow related to housing. For most people, either their housing is paid for or they have a mortgage at 2.5 or 3%.
And let's bring this up with, I don't think I made this point with annuities, Mike, is that they don't come with cost of living adjustments like Social Security.
No.
If they used to, some of the older ones used to, but they, of course, the insurance companies goes, oh, those are too expensive. We can't do that. So they don't come with that. So if that $500 or $600 or $700 a month you're getting when you're 72, you're going to get that $500, $600, $700 when you're 92.
Yeah.
And so if you look at a calculator and say, okay, what is inflation? Let's say it stays at 3%. Let's say it stays at 3%. What is my purchasing power going to be when I'm 92?
Yeah. It's going to be 20% or 15%.
Yeah.
The 500 won't go.
Yeah.
But annuities are sold primarily to people that are, and they're sold at this time because people are afraid.
Well, that's where they pushed and lobbied to get these in. Oh, we need safer options in 401ks, right? Let's put annuities in 401ks. And I think I would love to see a breakdown of the sale of where those sales are coming from. I'll bet a lot of them are coming in 401k.
Yeah, that too. Helen Olin wrote a book called Pound Foolish, Explores in the Dark Side of Finance. And I like a quote that she said, because she said, annuities are sold for one and only one reason, and that's to make money for the financial advisor. It doesn't say they're sold. And there are a few people that need annuities, but not the large majority. But they're sold in the same way.
Well, I knew one person where I work, all she sold was annuities. Everybody got an annuity. Even if they were 45, moving jobs, she'd take the money and put it in an annuity.
Yeah, well, of course. Think about it. Financial advisors. Annuity companies pay between 8 and 14%. Mm-hmm. Some of that goes to the financial advisor. Some of that goes to the firm. But I can remember when I started in the business in 1986, getting paid 5 to 6% when you sold annuity. And it was always done the same way. You do a lot of slides or a lot of presentation that say Social Security is going to run out. Mm-hmm. The market is going to go down. It's going to crash. All those. They paint a really negative picture.
Of course.
And they don't say they're talking about annuities. They paint all the negative picture.
No, you're not supposed to say that. Don't you know that? That's you never say that.
But they say we have a solution.
We have a solution. We have a vehicle that you can use. A vehicle, Mike.
A vehicle.
Yeah.
Because as soon as they say the word annuity,
everybody gets up and leaves like a timeshare. That's how they're sold.
Yeah. And, the SEC has had problems with it. They say there's up to 13 hidden fees in annuities.
Well, it's and they're selling to young people. They sell them what's called variable annuities, which have terrible. I know I've sold them before, and I've removed some of them because I look at them and I said, well, this thing hasn't done anything over the last 10 years. Terrible. Yeah. And they're so complicated, nobody can figure them out. You can't read the prospectus and figure out all the fees are coming. You see, if you stick it just in an S&P 500 index fund and watch it, you're like, wait a second, how come the S&P did 9.9% over 13% since like 2009 to 2019, and you look at the annuity and it only gained 5%. Wait a second.
Yeah.
Doesn't add up.
But the insurance companies are making money. The financial advisors are making money. It's one of the cartoons that came out in 1987, and I wish I had it, because it's so true for what goes on in our industry. It shows a financial advisor sitting behind his desk talking to a couple, and he says to him, well, you lost $50,000 and I made $50,000 in fees, so that's break even. The question is, what's in the best interest of clients? And the insurance companies and the brokerage firms all sell annuities as being in the best interest of clients. And it is, if somebody wants a steady income stream, but it's not in the best interest, long-term interest of the client. Not in any.
Not if that's their money to live on for time.
That's it.
If they want to put some safe cash and just want a little bit of buffer, that's fine. But putting a bulk of your money in that,
I think there's so many other things to put your money into.
you got no flexibility. Once it's gone, it's gone. You
Yep.
can't call them up and say, well, no, give me my $100,000. I want to use a difference. It's a done deal.
There's a reason why there's a 10 years lockup period.
Surrender period, yeah.
Okay, we're going to come right back after this commercial break. Don't go away. We've got more to say.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike and Al.
Mike, we just finished talking about annuities. I'm going to change gears here. Let's talk about China. And the reason why I want to talk about China because we talked about inflation and we talked about things we don't know where it's going to go. The Fed's pause and now they say we might raise interest rates again because a lot of people are banking on China opening, especially at their 3-year COVID lockdown. And they said, hey, we're going to go over there and sell them a bunch of stuff and our economy is going to take off because, as you said, 50% of the S&P returns are overseas. And so, but China is having a few problems.
They do.
I think more than a few problems. I mean, Xi took over in his third term. He's maintained an iron-fisted control. And, I just think about the way he acts, and before we get into the nitty-gritty on it, how does this affect the psychology of the average, Chinese person, especially ones that have now moved to these nice cities and thought, oh, I'm going to flourish in the cities, and what's going on there, it doesn't seem like people are going to flourish.
No.
I mean, he wanted his Belt Road Initiative, right? He wanted to dominate the world technologically, militarily, and economically, right? But, I was reading something about he wants to be technologically advanced. Yet 50% of the world's coal is skyrocketed, the production of coal. Mm-hmm. And they're blaming these what do they call them? Private equity firms investing in coal, right? And so I'm like, okay, why would private equity firms invest in coal? Someone has to be there to buy it.
Yep.
They're not going to sit there and invest in coal if nobody's going to buy it.
Correct.
50% of it's going to China. And so they want a green economy. They want to be advanced. But 50% of the world's coal is going there.
That's because coal plants are cheap to build.
Yeah.
Coal gives 24-hour-a-day electricity.
Yeah.
So it's either coal or oil, and coal is cheaper than oil. And
Right. But I mean, that's not technologically advanced. That's not going in the direction that they want to go. I mean, that's still sticking to their old ways of manufacturing and what they're doing and not making the transformation. Because right now, how many haircuts can they give each other, right? They've built all the bridges, airports, and roads they can probably build for a while. And now they got to transform themselves into that consumer economy. And it seems like they're having a hard time making the jump, like a lot of countries do. They get stuck in this middle income trap where they just, Brazil's stuck in it, where they make this much money and they stay there for a long, long, long time because they never make that jump. And I think it goes back to my first point is the psychology is that Xi has such iron-fisted control. Is he going to really release that type of, entrepreneurial, that type of creativity to his own people? I just don't see it happen from what I see. I mean, think about this. There was a G7 group in Japan that went.
Yeah.
And all the talk was about de-risking from China. So we're not going to abandon China, but we're not going to give them any more than they already have.
But remember, China stole a lot of technology, and now that they have their own, they write the rules, but the rules are not like the laws in America. They're not interpreted. There's not a Supreme Court. There's not something you can go to court over because the rules are so loosely written. Mm-hmm. They can interpret how they want.
Yeah, I mean, foreign businesses are being investigated, put in jail, suspected for breaking China's data, intellectual and property, proprietary laws. But they don't even know what it is. It's a moving target.
Yep.
They just, if they think or suspect, they don't even have to prove anything. They just come in and take you out. Mm-hmm. And so it's becoming a place that has become hostile for foreign businesses, yet at the same time, they want the foreign dollars flowing in. And so what companies are doing, but the other problem is that companies are starting to say, wait a second, if we bring our capital there, they can seize our capital. Mm-hmm. So what they're doing, they're setting up shell companies, operating and borrowing the money from a Chinese bank, and they say, well, if they do that, they're just taking their own money back, so we're not going to worry about it.
Yeah, they'll find ways to do it. I mean, 1.3 billion people. It's a huge potential market.
It is, but companies are not willing to give up that. They think it's the holy grail there. But, Sequoia Capital, a longtime Silicon Valley investors, have pulled out. The firm parted ways with their Chinese arm. They said enough's enough. They don't want to deal with it anymore. I think we could see more of that, Mike. I think we could see more foreign companies just say this wasn't what we thought it was going to be, and we're tired of just being pushed around and having our people investigated and thrown in jail, and then they're not allowing them to access information. There's a company over there, Wind Information. It's a Chinese firm that's employed by the banks that supplies the foreign companies and banks with information about Chinese companies. They were told, stop supplying information to the banks, to the company. How are you going to invest if you can't get any information? And then the other part was, if you're asking questions about Chinese companies and the company it has ties to officials, you can't get the information. They're like, who's asking the questions? And your company all of a sudden, gets shut down or investigated.
Yeah, it's not a great business model.
But I think that pertains to their own people too. I think if somebody starts a business, if you start some sort of information technology business, like you said in past shows, of they have one board member on there, an official government board member on their company, you can't really build that infrastructure and build that company out without their help.
And I think some of it is the people that are in control with Xi and the people he's appointed are all politicians. They didn't grow up. They don't have an understanding of what business is. And they think just because these companies have a lot of money, they should be able to share that with other companies.
Yeah.
It's a total sharing economy. They wanted to make it a sharing economy. So if someone is really successful, you got to share it with some of the people who aren't so successful.
But it doesn't seem to be working, though. It doesn't seem to be. I mean, how much of the economy over there is still agrarian? Is still people living in, I'm sure, a pretty good amount.
Yeah.
In their huge population, they have a population the size of the United States that is elderly. They have a real estate problem. They have condominiums. It's like 2008 over there, where they have tracts of homes and condominiums that aren't even finished yet, that people can't buy, that have paid for, that can't buy and move into.
No, they have a whole ton of problems. That's not to say that the United States doesn't have problems.
Yeah.
But China has the express purpose of replacing the United States as number one economically, number one powerfully, number one militarily. And so they're focused on beating us on technology, beating us on innovation.
Right.
And it's not working.
No, and we've stopped supplying them high-end chips, and then we stopped, we're putting, some people want to put bans on TikTok and everything for the Chinese company. And, I don't know if this is just necessarily like a vendetta for what they're doing to other foreign Western firms. I don't know if this is just a vendetta for TikTok and for not selling them the high-end chips, because all estimations it's going to take them probably 20 to 30 years to catch up without having those high-end to build those infrastructure.
Well, they're very, very good at copying. And so they've been able to manufacture chips that are 7 nanometers. Although there's a question as to whether the 7 nanometer chip is production quality or whether they have to put a lot of labor and intensity into it, making it uneconomical to produce. But they're really good at copying things. The question is, we now make chips that are 2 nanometers, and we're on our way to make a chip that's probably 1 nanometer, and they're way behind. They need chips to copy, and now we banned.
Yeah, and the reputation they're getting, the way they're treating the rest of the world, the way they won't write down debt for African companies, the way they treated the port of Hambantota, the way they treated the port in Greece, and bringing their military in when they said they weren't going to do that. And then who knows what's going to happen. We had Blinken over there last week saying that he doesn't support Taiwan independence, so they're going to go into Taiwan and try to take that. I mean,
they would love to have Taiwan.
Yeah.
Taiwan has a lot of technology.
Yes, yeah.
Taiwan is a target, and Taiwan belonged to China.
But here's something else they're doing, Mike. This is interesting. There's a joint collaborative, not international, but several researchers from different countries got to China and doing this research on genetic research. And I think it was Italians and Chinese and some other. And China's now blocking them from access to the research. It's like groundbreaking genetic research.
Yeah.
And they're blocking them on using this research. And I got to think if the other researchers are like, wait a second, we just put as much work into it as you. Why should we be blocked from getting the results and being able to utilize that genetic research? It has huge implications for maybe, who knows, heart disease, cancer, or whatever, right? But they're being blocked from that, and that's the game they're playing.
And they're playing it with a lot of other countries too. It's a very different world.
But I don't think
will they succeed? I don't
think so. No, I don't think their economy is going to succeed if they keep up. Because I think if they're going to treat these companies like this, they got to be treating their own people like that. We saw what happened with Jack Ma when he spoke out. You didn't see him for 4 or 5 months. But it doesn't present the environment for a robust economy that can that can supersede the United States and the West.
There's not an incentive for individuals to achieve.
No, I hear they're leaving. I was talking to someone who was from there, and he said, yeah, the people with brains and the people who have some ideas, I'm out of here. I'm out. I'm leaving. They can't retain that talent.
And when it all comes down, it's the talent makes it.
Yeah, it's like a bad baseball team, Mike. Remember when Howard Lincoln had the Mariners? The talent was just like, see you later.
Okay, don't go away. Talking about genetics. We're going to come back and talk a little bit about genetics because it may be the way of the future. Don't go away. We're going to wrap this up.
About money with the AFC team, Mike and Al on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
So, we mentioned genetics, and I just want to mention and my thought has been the 19th century, the 1800s were the century of chemistry, with aluminum, with steel, with cement. That was the century of chemistry. The 20th century, the one that we just finished, was the century of physics, with the internal combustion engine, with the electricity, with, computers, all those physics that we came through. The 21st century is going to be the century of biology. And biology begins with understanding DNA. DNA, just to give you a little bit of background, if you look at the human genome, the human DNA strand, if it was the size of a string, it is so long it would stretch from one side of the country to the other. And in many ways, it's really simple. When you look at somebody and you see their eyes and their fingers and their fingernails and the hair on their head, if they have hair on their head, it's made up of just 4 little nucleic acids that are attached. It's made up of what are called ACGT, adenine, cytosine, guanine, and thymine. Just 4 different nucleic acids, all put together in a way. And they're paired. A is paired with and C, G with T, and they're put together in a sequence. And if you talked about each pair and called the pairs letters, there'd be 3.2 billion letters. 3.2 billion. If you printed them in a book, the book would be 1.5 million pages long. 66 times what Encyclopedia Britannica is. And all those are divided into 23 pairs of chromosomes, 46 total. Apes and gorillas and chimps have 24 chromosomes. We lost one somehow. We lost a chromosome and gained a thumb in the process. But if you look at all those letters, how they're encoded, there's about over 20,000 genes. We only have 1,700 more genes than a worm has. And we have a lot of similar. We have 12,000 fewer than corn, 25,000 fewer than rice or wheat. Every living organism has DNA. Think about that. That strand, that DNA strand that's so thin and so long, that starts when we're born, or actually when we're conceived, and it develops into what makes each one of us unique. And it's inventive. That DNA strand is incredibly complex. From the simplicity of 4 nucleic acids, you can activate or repress actions in certain of our body cells. And there's almost an infinite variety of how things that happen. Think about it. The differentiation of cells, the ears are made, and then they're made once and no more. You make the nose, the organs, the fingers, you make them once and no more. Think about that strand of DNA. How does it know to do that? And, have you ever played the puzzle that starts with one word and you change one letter at a time to get to a different word? That's kind of what our genes can do. And when you look at where we are, 155 genes encode how we smell, the difference between spearmint and lemon and jasmine, vanilla and pepper. And only one part of those genes transmits to the brain, and it's a different set for each smell. And those combinations allow us to discriminate against everything we smell. So what does all that have to do with investments and what's going on?
That's what I'm asking, Mike.
You know what? We are beginning to manipulate the genetic
Well, you've heard of the CRISPR machine, right? CRISPR,
yeah.
Yeah, they can edit gene editing. So if they find a gene that's, a mutation that's causing a problem, they can pluck it out and start to look at fixing the genetic code to solve, real health problem.
Oh, and you have some other companies, Twist, who manufactures DNA. And they use it to build foods and flavors and fragrances. Over 2,000 companies use their products. A few years ago we talked about energy, and we've been talking about energy and maybe peak oil. But there were a couple professors at Penn State that took E. coli bacteria and they made several modifications of the bacteria. And when bacteria is growing, it throws off electricity. So they made a modification and they put a cylinder together with an anode at one end and a cathode at the other end. They filled it with wastewater. They put in the E. coli bacteria. And as the bacteria cleaned and made clean water, they created electricity. Now, economically, it was a very big expense, but it shows the potential that we can use in this. Mohawk Industries, they introduced a thing called the Smart Strand carpet line, and it's based on DuPont Sonora, which is made from naturally occurring sugars from crops. And because of them manufacturing it, what they need for the carpet is they need a kink in the middle so that it acts like a spring, so that when you walk on the carpet, it's soft, but instead of being depressed and leaving a footprint, it springs back to action. And the main ingredient was a PDO, propanediol. If I say that right, and I probably said it wrong, it's a petroleum base, and they're able to make that artificially. GenCore, now owned by DuPont, took DNA from 3 organisms, stitched them together, and they made a new bacteria with 26 genetic changes. And they can use that to take glucose from corn to make the PDO for that carpet. It's no longer manufactured from petroleum, it's manufactured corn residue, and it's biodegradable. And every 7 yards of Smart Strand saves enough energy and emissions to replace 1 gallon of gasoline. And they were selling enough a few years ago to replace 10 million gallons of gasoline a year. But I mean, they're starting to use bioengineering to make cement.
Well, you heard the study on cement, Mike?
Yeah.
Cement, so they did a study on cement, and they realized the cement that they made in the Colosseum in Italy and stuff years ago was better than, they couldn't figure out why it didn't crumble. And they realized it was these big lime that were in there, maybe by mistake, probably thousands of years ago, they didn't know. But that lime, they figured out, and this is going to make better cement today, that lime, when the thing would crack, when it got wet, it would liquefy, and then it would reharden so they wouldn't split apart.
Yeah, and they'll begin to make other things like cement. They can build plastics from, they can build that. So bioengineering is taking biology, not just in biomedicine, but into places which there's going to be new products and new companies, and those are going to be investment opportunities. It's a whole new world of what we're going to be seeing, and a lot of that very positive for our life and our lifestyle. We're coming to the end of the program today. Have a very good week and a very good weekend, and we'll be back next Saturday to talk about money.